is ripping.
My tummy hurts.
Pretty good, Brendan.
Hey guys, what's going on? Nick with Off the Chart Trading. You might be surprised to see me / hear me, but we decided to leave tomorrow morning, Wednesday morning, so I am here and I decided to do the video like usual. I typically do Tuesdays and Thursdays, so figured since I'm here, might as well do it. Nothing too crazy, and I always say I'm going to keep it short, but end up talking for like 20-30 minutes, so we'll see if I can make this as short and sweet as possible. Actually, let's take a look at ETF sectors in general. This is a screen I focus on throughout the day. For you guys that are newer, I have a top-down approach to trading. Start at the indexes, the internals, and then, if the NQ is dropping, but, the Russell's going higher, or the Dow shooting up and everything's dropping, I typically think of it as a satellite, and, you can zoom in and out, or think of it as a microscope. When you're in high school and you switch the little filter things, whatever they're called on the side, and just got, bigger image, whatever. You get the point. You're zooming in or out. So I typically start at my internal screen, go to my ETF screen, which is basically the 11 major sectors of the S&P. Granted, I have some other ones that aren't necessarily in the the stock themselves might be in the S&P, but sector specific, like chips and, pot stocks and some of these other little ones. The reason I have this is I think it's important to know where money is flowing into and where money is leaving. So especially on days like today, which if you've been watching the videos nightly, or at least when I'm up, a lot of it kind of has been going fairly well in the sense of, hey, watch out for this, or, once we switch to the internal screen, I talked about this the middle of last week, I think, when I did Thursday's video, just to be cautious. I don't remember the exact name of the video I made, but I'm pretty sure it was, caution or something along those lines. And then sure enough, what has happened into yesterday's close, and then majority of today, we did see some selling. Nice rebound towards the close, but it's also important to be aware of the potential signs of a pullback, so you're never caught off guard, which I'll show some of those things in a second. But the one thing I wanted to start with was just for myself, when they're selling or whatever, is it broad-based selling? Is it specific selling? And I think today, for the most part, was pretty broad. However, there was some, I guess, shining stars, if you will, or, things that were kind of bucking the trend. And I know this is a busy screen. If you're looking at it for the first time, it's very pretty, very colorful, and it's a lot to process. But just like anything else, once you get familiar with something, it's just kind of, your own style, and you kind of just roll with it, and plus and minus what you want as far as removing things. But something that's cool that we do is I share this exact workspace. So if you use Thinkorswim, you can use this exact same workspace that I share. I just call it my ETF screen. It's on our website if you're a member, and you can literally download it and use it however you see fit. But and we have webinars on it and stuff. But I just wanted to talk about what I see, and we'll see if this continues. And for me, especially with my trend-based candles, I'm looking for a trend. For you guys that are watching this, these are mostly going to be 5 days going back, and you should be able to see a trend for some of this stuff. Healthcare bleeding out over the last couple days, trading sideways, and then, going higher into the close. Semiconductors, great, 4 trading days straight. And then as of yesterday, kind of plateaued, and what has it been doing? Kind of selling off once again, a little strength into the close. But some of them are more defined. Like, look at financials this entire week. It's just been kind of straight up. So, I mean, if you went long, I know I mentioned this early, and the thing I love about the room is sometimes I don't need to specify I am going long financials, I am going long Bank of America, $40 strike for this week. Obviously I share those trade ideas, but I'm not going to try to touch all the water. So sometimes I'll end up just giving my 2 cents on what's going on with the markets. Like, oh, I see, relative strength in the Russell. So people that are members know to potentially, if they like that idea or they see something, to look at IWM or play the RTY directly, futures or whatever the case may be. So we had a case of that today, where people, even though we did see some pretty broad-based selling for 80% of the day, I think maybe the last hour or so, not even the last 45 minutes, is when we actually started seeing a little reversal, which I know Ed took a Q's trade, and then I followed up with saying that I did like the potential of a run into the close. There was a nice squeeze setting up, and I did notice that we were breaking above the 21. So some signs for me on my 15-minute chart that there was potential strength and potential short covering into the close, and sure enough, some people were able to capitalize that. But back to what we're looking at, the financials have been fairly strong. Will that trend continue? Possibly. Maybe money's flowing out of tech, which is the one right next to it, XLK. Think Microsoft and think Apple and so forth. Same thing as semiconductors. They were great Monday for the first 2 hours, hour and a half, and then what have they been doing? Kind of selling off. Once again, a little bit of strength into the close, but nothing too crazy. Maybe this trend continues. So when you see stuff like this, is money leaving big tech and going into financials? Are they getting ready to load up into banks, even though I think they're, I don't want to say expensive, but if, the dollar's higher and you have the potential of interest rates increasing in as early as May of next year, then banks would, benefit from that. So maybe money, sometimes if the 10-year and all this other stuff starts going higher and, you have Apple and Microsoft and all these big names at all-time highs, it's just, I don't want to say common sense, but probably good management to take profits. And when you take profits, you don't typically just take that money out. You look to put it somewhere else, especially if you're running any type of fund. And what are they going to look for? Well, it looks like financials. So that might be something to pay forward into not just, the next couple of days, but maybe keep an eye on into next year. Financials have been relatively strong this year. And I talked about it around this time last year, is the game of, I want to say musical chairs or just, a 360 of what's going on. But, energy, you couldn't give oil away last year in September and October, and then look what the price of oil is trading at now. Out of the corner of my eye, it's a little over $78, which is just crazy. When it was negative, 15, 16, 18 or whatever at the time. And then what happened? Energy and financials have done fairly well this year. So normally I like to say whatever's weak going into the end of for almost a full year, whatever's weak will typically get stronger into the following year as money, profits are taken on stuff that's working, and then it's typically putting the things that aren't working, and then you just see that rotation. Then you got the talking heads on TV talking their own book. Oh yeah, we love financials, we love oil, we bashed it 6 months ago, but we're really into it now. Anyway, you get the idea. So I noticed not only financials, I didn't take a trade in financials, but one thing I did mention, especially with the whole OPEC and oil, and so forth, I took a trade in XOM. Instead of playing energy directly, and you can do XLE calls if you wanted to, I just picked XOM. It's fairly inexpensive, and majority of the time when I see oil prices moving, I do play XOM, and majority of the time I do end up doing actually quite well with it. So it was a fairly quick day trade. And I make it about 35% or so, give or take. I was up about 75% at one point. I just don't trust how the market's been acting the last couple of days, so I figured 35% locked in a matter of 20 minutes, not even 15 minutes, is better than nothing, especially since I'll be gone the rest of the week, just, little paydays throughout it. So I was able to lock in about 35% on that. And like I said, I was up a little more, about 75-80% at the highs. But once I saw XOM dropping below 63 and not rebounding fairly quick, I figured I'd stick to the reason that I took the trade, and that was just a quick day trade. So mentioned that one in Slack, and I think some people did play some type of oil-based play. Like I said, that's the beauty of the room. It's never, you don't ever have to take the exact trade. You can just take the idea and make it yourself, which I'm a big believer in. But yeah, I just wanted to show that sometimes when you see sectors like, okay, look, shoot, financials, higher highs in that sense from the lows of Monday to going out at the highs of the day today. And energy is fairly similar. I think aggressively speaking and directionally speaking, financials, top left, is probably one you want to keep an eye on. Will that move continue into tomorrow? Maybe it slows down. But when I say financials, I want you to think, Citi, Goldman Sachs, Bank of America, JP Morgan. Pick your vehicle, whether you trade all of them in the ETF of XLF or you play specific ones. Bank of America's cheap. You can buy calls for this week, probably at the money for 40 or 50 cents. JP Morgan's personally one of my favorites. Normally at the money for the same week, $3, $4. Granted, with Thursday being closed, Friday half a day, it could be a little off, but you get the idea. And Goldman Sachs obviously being more expensive, but will typically have bigger moves dollar-wise. But anyway, that was just something I wanted to mention. Also, staples. I always tell people this in the room is keep an eye on utilities, XLU, and XLP. Reason being is sometimes you will see money flow into these when everything looks fine. It's a sunny day, it's beautiful, nothing can go wrong. And you slowly see money going into staples and slowly see money going into utilities. Typically, that's a red flag to me that there is money going to be leaving other bigger things, and that either there's, I don't want to say a correction, a pullback, a flight to safety, if you will. So I noticed that yesterday with this move straight up for almost majority of the day. Came back a little bit, and then obviously going out near the highs of the day today, breaking above yesterday's highs. So I took a trade in Walmart. We'll take a look at Walmart real quick. I have traded utilities before. I mainly trade Duke, DUK, or NEE, Nextera. Sometimes T, depending, but those are the three I normally think of when I think of XLU. And when I think of XLP, if I'm not playing the ETF directly, I'll normally do Walmart or Costco. I rarely trade Procter & Gamble, but that is the biggest holding in it. Sometimes Coke or Pepsi, KO, PEP, or PEP, whatever it is. Normally, whatever chart looks the best out of all of those, I'll just pick that one and put my money in it. Sometimes I'll do that instead of hedging for a potential drop. Sometimes it might not happen and money is still rotating into those. So I would definitely keep an eye on staples as well. We can switch back to my, which screen is that? 5? Yep. Walmart, trade's working really well. Almost, I think it hit 146 or something equivalent today, just shy of it, if I'm not mistaken. Yeah, just like within like 5 or 6 cents of hitting it. So their earnings are actually pretty good. I wasn't on the call, but listening to an interview from the CEO and what they're doing, the overall numbers actually seem pretty solid. It's not uncommon for names like this to get hit after earnings, regardless of how good it is. One thing I did like about Walmart was that it was holding its 200. It tried to break below it. It closed above it. We had a red day the following day, but still didn't break below it. And then we got in yesterday, and it's just kind of been working for us. So one thing I will be watching, even I'll be on the road majority of tomorrow, is, we closed right above the 34, and now the 21 is off by, 7 cents, 6 cents? I mean, we're not talking much here. And it is above the 8. Obviously, they're all flipped because of the selling we've seen. But I think if we get above 146 and close tomorrow above 146, I wouldn't be shocked if Walmart ends up potentially, I don't know if it's going to head all the way up to 152, but maybe target on the, more conservative, quicker side, maybe 148, and then potentially shoot for 150. And that's typically how I'll play these things. I'm not looking for all-time highs. I'm not looking for a crazy swing. I'll typically go out a month or two and let these ideas play out, and either they work or they don't. I normally risk the entire debit paid, so I have calls in Walmart right now, and they're doing all right, I think. Yeah, nothing crazy. Up 560 on those, but 10 lot, there you go. I'll show the trade. Like I said, we've been in it since yesterday, so we'll probably have a little better feeling, but anyway, just figured I'd show that. So that's my way of playing staples, just in case we do end up seeing any type of pullback or something that's bad today, which the majority of things were down. Walmart was green. So sometimes you don't necessarily have to short. You can play something like this. Now, speaking of a short, I did take a short today, and I got out. It was near these lows, and then we ended up breaking out a little lower and finding support and then heading higher. So I put a stop once we ended up seeing some selling. I think I was actually on this candle. I called a short in the NQ. I was actually specifically playing the futures on that one. It was moving down that 15-minute candle. It doesn't look as big. When it was actually happening, it was pretty massive. Versus some of these other ones, especially almost not right out of the gate. I think it was around 10 o'clock or so. We ended up seeing that selling. So after the first 30 minutes looked all right, and then boom, we had that flush. I'm always worried. You don't want to short the lows all the time, but through experience and just screen time, you can kind of feel the tempo, the tick, everything else. And it wasn't that crazy of a drop, and we didn't really see any super negative ticks. What time was that? See, that was around 11:30. So we ended up seeing selling around 10 o'clock. And if you cross-reference it, I mean, the ticks weren't really, I don't think we even saw, we didn't see the first 600, negative 600 tick till about 11:30 or so. So it wasn't like any type of heavy selling. But after yesterday's, drop into the close, I was thinking that we might end up seeing some more weakness in tech. And I look for divergences all the time. So if the Dow's up 100 and the ES is flat and the Russell's flat, and you got the NQ down 100 points or 150 points, that's something you should pay attention to. And that's how the wheels in my brain start, and that's how I try to teach and go over in the room is if you see weakness in the NQ, go short the QQQ, or, short the futures, or, think of XLK. think of Apple. I mean, sometimes there's going to be one-offs because Apple might have an upgrade or do this or do that and go be up $3 on the day, but everything else could be selling off. So you can get as, specific as you want, as in down to the stock, or you can broadly, semiconductors are in the same pool as that. So short the XM, I didn't look at Nvidia today. I'm going to do that off screen real quick. But yeah, I mean, it was down $2. I know it was down probably a lot more and rebounded. Yeah, at the lows it was down to, what is that, like 308 and finished at, so it almost moved $10 into the close. So it was down majority of the day as well. And I'm sure AMD, yeah, actually down more than Nvidia. It was down 260, and at the lows it was down to 145. So it had about a $5 rebound. So we saw some pretty significant selling. And do you notice how I already knew this happened without actually turning to the ticker? And that's my point, is when you have a macro view of the markets, and then you once again use that magnifying glass or telescope or whatever, microscope, whatever the case may be, to look at objects farther away and get progressively closer, it just makes it a lot easier to find trades. I don't have to worry. I don't use scans. I don't do any of that type of stuff. I can find trades this way. That I just mentioned AMD and Nvidia weakness, and I even look at those charts at all today. And that's using the indexes, and that's using the ETFs and so forth to see that information. So, anyway, so that was a quick NQ trade for me. It was moving so quick that my Infinity futures couldn't even load the numbers. It was just a gray screen. So I'm like, oh, that's great, but I can't see anything, and just kind of like be like driving and putting a blindfold on. Probably not the safest thing. So I knew I was making money, and I just flattened out because I couldn't see anything. I made about $130, $140, something along those lines, in a matter of like 15 or 20 seconds. And that's on a one lot. I don't trade big on that futures account. It's a fairly small account. I think I have 5,000-6,000 in it, maybe a little more now, because I have been pretty consistent making between $100 to $200 in that account. Just showing that you can do it and you don't need a big account on futures. And that's a great thing about the room. We do a little of everything. It's not just a, one trick pony and, just one type of thing. We trade pennies, we trade futures, we trade options, we trade spreads. We do literally every type of thing under the sun when it comes to trading. So that's kind of cool to have, a little mix of everything. But made some money on the NQ, and then once that trade's done and we took out those lows and I got that 821.34 cross, that white arrow, I'm like, you know what? I'm 99% long. I think it's smart to do another intraday hedge. And that's exactly what I did. So I got some Q puts, and I was writing them down. And I don't know how much I made. I think I made $1,100 or whatever. It wasn't anything too crazy. But at the lows, or close. So it was either this candle or this candle. One of these candles I put a stop in. And I think it was right around here is when I got stopped out. So, at the end of the day, that looks great. That was great, but, then you have these lows, and you never know where the market's going to go. But when you see a setup, you take that, the squeeze firing short, whatever the case may be, and you are right by the sense of being up, 50%, 75%, 80%. To me, it's safe to put a stop in. Now, the thing that sucks is, oh man, if I didn't have that stop, I could have been up X, because down here, I would have been up almost $3,000. So it's kind of like, it's one of those things, but I'm happy with, I was able to take a trade. I typically do intraday hedges. Majority of the time when I take hedges out for weeks, they expire worthless. They're, but typically that's what you want. But through my own, trading now almost 10 years, if I never took the hedges, that money I would have lost, I wouldn't have lost the money. So I don't typically like holding hedges longer term. I typically call them intraday hedges. Think of a shield. You're going into battle and you just want to have, a shield for that particular day. And if I can, make a little money on the futures and make a little money on those options, that was great. I wasn't in the trade very long. I think about 45 minutes or so. And yeah, obviously you can't, it's all hindsight. Oh, I hate those YouTubers. Oh yeah, you should have shorted right here and got out right here. Like, okay, great. Thanks. Tell me real time. I literally called right around here. I said I had a good feeling that this was going to go long. And sure enough, plus 600 ticks, ding, ding, ding. And literally within minutes, we're end up heading back up. So, that's recorded. It's real time. It's not hindsight or using on demand to try to show a point. We do it live every day in the room. But anyway, that was a good little hedge. NQ was just definitely the weakest, so I wanted to focus on that. Typically, what's weak will get weaker, and what's strong will get stronger. And if there is a rebound, typically the Dow's actually been holding up pretty well. And you can just tell by the colors. That's why I try to keep it as simple as possible. What colors do you see the most of over here? Green. I see a majority red. I see a mixed bag on these. So this is the weakest. And even though I don't specifically like playing the Dow, you could play the diamonds or break down the 30 stocks and which one's leading right now and put money into that, because that's where money's flowing. Once again, you want to be like the remora fish or whatever, right under a shark. Everyone wants to be the shark and stuff like that, but that's not, you don't need to get, you'll get fed just by following the shark, and the shark in this analogy is money. Just follow the money. I know it sounds simple, but too many people overlook that. They're too busy being on Reddit or watching YouTube videos trying to find the next hot stock, when they should just be putting focus on internals and ETFs and how this works. I talked about this in last week's video. I didn't like this, even though we were heading higher. There was more selling going on, even though the prices were moving higher. And the analogy I use is we're going up a mountain and we're on empty. And there's no gas stations. We know eventually it will run out of gas. Is that in 5 seconds? Is that in 10 minutes? Is that an hour? We don't know specifically. We just know we're running out of gas. And that was 3 or 4 days of just straight down. Now, yesterday was pretty good, kind of rebounding, and then the close we got hit, and we spent about half the day underneath. But that was one thing that also didn't make me think that we were gonna completely bleed out or fall apart, was because we didn't really start dropping like these types of. I don't really go by the last part of the day. Sometimes those are exaggerated, but I go by the trend. Below the zero line for 4 trading days, almost all of last week. Even though price was going higher, these were dropping, and these were red flags. And I talked about on, I think, either Tuesday's video or followed up on Thursday's. And there you go, confirmation that we did see selling yesterday. Pretty aggressive selling. Funny enough, I did a same hedge as I did yesterday. And I even wrote in trade alerts, which is what we use on Slack to let everybody else who can't be in the room know what's going on. I'm like, honestly, I'm just going to let this thing expire worthless. I was down like $1,200. And then within the last 10 minutes of the day, I was back to break even. So anybody who trades is like, oh, that's a win. If you have a trade that expires in like 10, well, technically 25 minutes because of the queues would trade to 4:15. But regardless, you got a trade that expires in 10 minutes, and you go from being down $1,200 to being up $50, $100. You take that. So I think I made $50 or $100, which is great. I've been happy with break even on that one. Granted, once again, hindsight, if I held in an extra 10 minutes a little into the close, I would have been almost triple that. But actually, no, a couple thousand. So a lot more than triple what I left. But my point is, I'm fine letting the trade expire, and it's great when those do end up rebounding. So made money technically on paper yesterday with that hedge, and then also some follow through today. Dollar has been up. I was talking about just keeping an eye on the 10-year, because if this goes higher, I think tech will be under pressure, and I think money will flow into financials, whether that's into the end of this year and we continue, or going into next year. Bitcoin. Kind of a mixed bag, but overall trending higher today. Bonds after hours here moving up. And then one thing to keep an eye on, the yen is dropping. So that is something to pay attention to. Let's head back to here real quick. I was just, when I was checking AMD, and sure enough it was down like a magic 8 ball. What else? So I talked about my Exxon trade, the Q trade. I did take a trade in Mogo. I shouldn't say rarely. When I do it, it's super small trades. There was news that was reported that the Finkelsteins, Steins, whatever their names are, the Facebook twin dudes, Winkelstein, Twinkie, whatever their names are, they put money into this stock. And to me, it sounded like some pretty legit move. They have a good amount of money. And for them to invest in, especially with this chart not looking too hot, but that weekly squeeze setting up and momentum shifting, even though we are below the 34. It's not the nicest looking chart, but sometimes I prefer when things look bad, because then I think the move could be a little more exaggerated to the upside. And I got in it was probably about 10 to 15 cents higher. I have calls in this one. I think I did till either December or January of next year. We'll see how they go. I call them speculative plays, and they're not really necessarily lotto, because lotto to me is it expires like today or tomorrow or this week. This is more speculative, that money's flowing into it. The fact that it's not really up after hours and finished red on the day, not the best sign. But you'd be surprised. Some of these names, like, it either takes a while for the news to circulate, or it's not important that day, but it's important the following week. And nothing's more frustrating than being in at $5 and the thing's at $10 the next week. So maybe something to keep an eye on. I don't normally risk that much. I don't risk anything, much to begin with, but I even risk like 1/3 of, what I would normally use per trade in these types of situations, is because I don't know. But these are nice when, good example, looking at this, how this worked. $5 over here, deja vu in a sense. Maybe, $5 and then boom, $12 2-3 weeks later. I wouldn't mind being in that, especially with options, and I'm at the money at $5. So food for thought. The other one I did get into today is DraftKings. I can't remember. Was it last year? I want to say it was almost a year ago. So probably, yeah, a little over a year ago. Somebody in the room asked me as far as a good level after we saw from the high from $64, and it just kept bleeding out where a good level is. And I just threw the psychological level of $35 and saw that we had a little bit of consolidation here, meaning there's a lot of time and a lot of volume spent here. It's easier to see in my other charts with market profile and volume, but I just saw a good amount of volume over here, and just how each candle's a week over here, and there was a good amount of time spent over here. So when this came down and it was hitting its 34, I was like, this might be a good area, especially with earnings coming up to potentially. And funny enough, it was like 35, the low 35s I mentioned, and sure enough, from there it did continue higher, and we did see all-time highs. I also had calls earlier, I think over here somewhere, more of a seasonality trade, meaning football was starting, basketball getting ready, and so forth. And I did catch this move and actually got out around $60. The goal was to potentially hold it into, I think the calls were good till end of this year, either December or January. So I had plenty of time. But once I'm looking for this, yes, you could see follow through, and there was another week or two when we went at 65. I mean, that was the stretch goal. $60 was the short term, but I'm happy if I can get in over here, and not even a week later it's at $60 and I'm up $10 or $8 or whatever. I'm going to get out into that strength. To me, that's the guaranteed money. That's the easy money. And then look what happens. It's all hindsight. This thing could be at $100 right now, and you could literally put a minus. Little fun fact: put a minus in front of a chart, and you can flip it. That could have been it. I could have got out right here. I got in right here, got out right there, and then look where it could be. It could have been $100 or whatever. I'm just using that for a visual representation. Oh man, look at it go! It's at the highs or whatever. But I took a trade in DraftKings. I like that $35 area. When it comes to these types of trades, I'm not, I'm perfectly fine risking the debit paid. I'm fine with every trade not working. That's psychology 101 for trading. That's your gold nugget for the day. Once you can detach yourself from the monetary value and you don't care if you lose money, trading gets actually progressively easier. But just it's probably the hardest thing to overcome with trading. But anyway, once you get past that, it gets progressively easier. But my point is, it did drop a little below 35, but we did close above 35. So far that level is holding. And who knows? Maybe it's at 33 tomorrow or 30, and it just continues to bleed and goes down to the 20s. I don't know. But I threw out the $35 before, and every time it's come somewhat near here, it has bounced off. Doesn't mean it's going to happen again. Always have to be aware of that. Doesn't matter if something has happened 8 out of 10 times or 9 out of 10 times or 10 out of 10 times. That should never sway you from risking more or less. So once again, a speculative kind of I call it catchy knifing. You've heard the term catching a falling knife. I just call it catchy knifey. And that's what I did with this one. Same thing with Snap, even though this was from last week. Snap was up actually today with all this craziness. Momentum shifting higher. I was hoping the $50 would hold. I mean, we ended up, I think, closing, a little around $50. And then today we were a little lower, and then we did end up coming back. So same concept. You have a stock consolidating, looks great. Earnings, something about Apple, blah, 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 and then trades sideways. I was talking about breaking lower. It did, so we'll have to see. I mean, this thing could literally continue lower, but this is a good sign that it's holding. And I went out pretty far, I think in March or April of next year. Just once again, catchy knifey. It's dropped. Sometimes it's as simple as that. It's down $25 from where it was earlier, and it's 30-something dollars off the highs. So it's a good percentage down in a short period of time. So normally when something looks awful is typically when I want to risk a little bit of money and just see how it goes, because if this trades sideways and then slowly floats up into the end of the year, then the trade will work and I'll get out. I don't have to wait till March or April or May or whenever I'm getting out of this. Same thing with Activision. I talked about this trade last week with you guys. Same concept. Just look at the levels it's at. It hit not all time, but 52-week lows earlier. It's just been selling off. I think the news and everything else going on will eventually they'll right the ship, whether that's the CEO steps down or whatever the case may be. But same exact idea is that this thing has been beat down. The stock's been not cut in half, but pretty darn close. And we are near 52-week lows. So I'm looking for somebody to step up and say, hey, this is a video game company and they make video games. People are not buying Call of Duty over what's going on in this company. And ultimately, I think people will be investing. Is that at $55? Is that at $50? Is that at $60? I don't know. And that's, once again, you just have the idea and you're willing to be right and you're willing to be wrong. Like, oh, cool. Like, that's great. You know, I got in the 60s and that is around where the lows were. And here we are at $75 and we're climbing higher. Or it just continues to bleed. And I have to, that's obviously, you know, behind door number 2. You know, with trading, there's 16 million different doors, and you just have to be aware of all the different outcomes. So no matter what happens in this, you're never surprised. But yeah, I think that's about does it. I think Ed does a video tomorrow. Obviously, the markets are closed on Thursday. I talked about making it a short video, and here we are 30 minutes in. I just love to talk. Maybe I'm just talking to myself. Maybe no one's here past this time. But anyway, I still need to finish packing and moving stuff in the car in 30-something degree weather. So let me go do that. On that, from off the chart trading to you guys and your family, have a safe and happy, I was going to say Halloween, happy Thanksgiving. And we're always here if you guys need us. I'll leave a link to our Facebook group if you're not familiar with it or not a part of it. Also, a link to our Slack. There are a few rooms on there that are free. And obviously, if you'd like to join us, we are doing a Black Friday special. I'm not sure the exact details. I don't think they've been finalized. But you can look at our site on Friday to see. I think we'll probably end up doing a trial, very inexpensive. So maybe if you do want to wait, or maybe if you want to sign up, wait till Friday. Anyway, on that, you guys have a good one. Take care, and hopefully it's been helpful.